Hey, hope everybody is having an awesome weekend. Ryan Lee, Planet Cheapskate, popping on here to give you your rate update in the weekend. Normally I like to do these on Friday. Sometimes, life happens, stuff pops up, and I just have to kick them to Saturday. Strange thing, analytically speaking, my Saturday ones usually do better. So I don't know if I should move it all the way to Saturday or not, but you guys let me know. Give me a thumbs up if I should move these to Saturdays. I don't have a problem coming in. I work 7 days a week, 24/7. I'm always available. So if I need to do them on Saturdays, I'll come in and do them on Saturdays. My sweetheart, she works Saturdays, so I can work Saturdays too. No problem. Doesn't bother me one bit at all. But yeah, I wanted to get on here, wish everybody a happy and safe Memorial Day weekend. If you go to the lake, if you do whatever you do for the holiday weekend, be safe and enjoy. And remember the reason for this holiday. Thanking those who have made the ultimate sacrifice protecting our freedom. And so wanted to just start off by saying good luck to my realtor partners out there. If you need any help marketing any properties, just let me know. I have several different avenues that we can push that property out to. And if you need any help with those pre-approvals, I can get you done. I'm out here. I'm going to be taking calls all weekend. And if you need those, I can kick them out to you in quickly as 10 minutes. We can get those offers in right on time. I'll get you a pre-approval. I'll get you a cost sheet, whatever you need. I'm on point. We're going to get those 22 days or less on the closings as long as they are a bulk qualified borrower. If you need to know what that is, just reach out to me, 316-744-5819. I will let you know exactly what it takes to make that 22 days or less offer. So that is that. Rates, it's kind of wild. I was looking back at some of my rate updates, and about 2 weeks ago, I was predicting, hey, is there a rate storm coming? Just because some of the analytics that I follow, I was like, what's going to win out? Because the core consumer price index has been cooling off. It's been getting good. Inflation has been cooling off, but the Fed is doing things that is offsetting those gains that we're making in inflation. I think they just want to be extra careful, extra sure. So they're still trying to dampen the economy. And one of the drivers of the economy is real estate. And so by keeping interest rates high, they're trying to dampen the demand. And it is working on the supply. The supply is very low, which I think it's kind of starting to do the inverse of what they're wanting it to because of some of the measures that they're not letting up on. For someone to sell their house, they have to have somewhere to go. Well, a lot of the people that have houses that are wanting to move are very financially savvy. They're homeowners. They've been dealing with it for a while, so they know they want low rates and they want there to be new homes that are nice, it's kind of lagging behind. COVID really hurt new homes on the market, and they're just now starting to kind of get things cranked back up. The supply chain had problems. I feel like things are it's really slow when everything happened because of the pandemic. So a few negative things out there so far. The Fed has been winning as far as the rate battle. Inflation is looking good based on my metrics, but the Fed has a lot of control over that. And if they just don't think we're ready for it, that's kind of where we're at. There was a Fed chairman, I think he's out of St. Louis, and he was saying that he's down for 2 more hikes this year, which we were expecting based on the inflation that there wasn't going to be any more hikes. So we'll just have to see if there's not any more hikes, or if this next Fed meeting, they announce that they're not going to hike it, then that means we're going from 2 potential rate hikes to 1. You're going to see the rates, come back down a little bit. And so I really think we're in a steadily rising rate environment, but we're also going to see it oscillate between, someone asked me this the other day. I think we're probably going to see some oscillation between probably 9, maybe all the way down to the upper 5s. If I was to, make a a vague estimate. And I know there's a lot of leeway in there, but I'm doing that just because it's like it's an estimate. Nobody knows. I mean, heck, they could shoot tomorrow to 20. Nobody really knows, but just kind of based on what I'm seeing, and then kind of the positioning of the Fed versus the inflation numbers that I track, I'm thinking it's going to be oscillating, kind of moving in between two, but it's also probably going to be raising at the same time. The all eyes and ears are probably on that next Fed announcement where they determine whether they're going to be raising rates or if they hold off a little bit. I personally think they may hold off, knowing that they have another chance to kind of read the market and see what it looks like, and then either do one or not at the end of the year. So we shall see. So that is that. I wanted to explain these rates. These are not rates that you can go to a bank, go to a credit union, go to a retail lender and get. These are rates that I get by making 50 of the most competitively priced banks, lenders compete all over the United States. I have them do this for us. And I take an average borrower. Okay, this is someone who has a 700 credit score looking to borrow $250,000 on a 30-year fixed, charging no points, and it's on a 30-day lock. Okay, so that's kind of the details that you need to know, because these rates can be beat. The way you're going to beat these rates is they're going to give you like a 15-day lock or a 20-day lock, and then they're going to be charging you all kinds of ungodly amount of points. That's the way these rates can be beat. These rates are no points and a 30-day lock, which is pretty standard in our industry. Usually, and the 30-day lock just means we got 30 days to wrap things up. When you're working with someone like me or working with someone with my organization, we do it in 22 days. So we are hyper fast, and we get that thing rocked out. So that's an explanation of my rates. Without further ado, let's take a look and see what they did. Conventional, 7.25 with an APR of 7.547. FHA, 6.5 with an APR of 7.472. VA is at 6.75 with an APR of 6.959. And USDA is at 6.625 with an APR of 7.076. So first time for everything, USDA is actually lower than FHA and VA. That's wild. But you never know what's going to happen in the rate environment. Usually the Govy loans, which is FHA, VA, USDA, they're pretty close to each other. And then conventional is usually a little bit higher because traditionally mortgage insurance is a little bit lower on that. FHA is a sweeter deal now because they lowered the mortgage insurance. So you really, sometimes, depending on what your credit score is and how much down payment you have, you really got to look at both of them. You got to look at conventional and FHA now, even with a better credit score, because of that mortgage insurance. So conventional is up about 1/8%, not too much of a move there. The Govy loans, FHA, VA, USDA, huge move. FHA, VA, 0.5%. USDA, a little under a third. So that is that. That's the rates. Hope you enjoyed it, and everybody have a happy and safe Memorial Day weekend. If you need those pre-approvals, get a hold of me. If you need any advice, if you're going through some stuff, your lender's taking you to the ringer, get a hold of me. I have been known to solve the puzzles and then just get it over to those lenders to figure out. So I can help you out. If you need anything, 316-744-5819, or just hit me up on the description. Reach out to me. I'd love to help you out however I can. All right. Bye-bye.